Well, hi, everyone, and welcome to the Buffett and Beyond Stock Market Recap for February 8th, 2025. And folks, what a week it's been. And remember, if you want to walk on this beach like Jimmy Buffett once did, because he lived at one time right up the road a couple of miles, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the theme is the same in the market, down on Monday, up during the week, then down on Friday. And this is the third week of this type of market action. The market is going nowhere, but our portfolios are actually doing nicely, and one of them is up twice as much as the market. In our weekly stock analysis video, well, amazing, Amazon is spending more than anyone on AI, and I'm talking about Meta, and I'm talking about Apple, and I'm talking about Microsoft. And it is even increasing its research spending over last year. But they are saying there's demand out there, and so it justifies the spending. But being up 140% over the last 2 years, is this the right time to buy this stock? Because it didn't look too good over the past couple of days. And our ETF video, well, the market was down this week, but our ETF portfolios were actually up for the week, and that doesn't happen very often, folks. So we're going to go out and have a good weekend this weekend, aren't we? And earnings on our portfolio stocks were beating expectations, which is exactly what we, well, expected. And let's get on with the market and see what it did. And oh boy, yeah, we caught this bottom down in here, and so we were long our QQQs, and we held them through. Here's the market decline, and here's the other market decline, and here's the other market decline. You know, and these are a week apart on all of them, and we're right back down to the reversion to the mean, and in this case, the mean is that 20-day moving average. So we sold our QQQs this week. You know, bought them somewhere down here, sold them here because of that. Actually, we put out the alert in our newsletter on Thursday, and so we sold them at Thursday, which was very, very nice. And then Friday we had this big decline, and some of the portfolios didn't sell until yesterday, which was Friday, but that's okay. We still made a nice little penny in here. And here we are at, as I mentioned, reversion to the mean. So where is this market going? Well, it hasn't gone anywhere over what? 2 months now, over 2, yeah, about 2 months. So it hit that 6,100. So that seems to be this level on the S&P 500 that is overhead resistance, and we'll see if this 20-day moving average can be support for a while. And our indicator down here, intermediate term indicator, is flat, and that's not a bearish signal, folks. So it's just doing nothing, going back and forth in here. Here is where we caught that this latest rally in here and just bought some QQQs, and we held it, and we sold some cover calls, which I'll get into in a second. Now, portfolio protection. This is about a $150,000 portfolio, and we have 3 puts. And these are on the SPY. Now, remember, the SPY is 1/10 that of the S&P 500. So we buy 3 SPYs. Will cover about $50,000 each. That's why I say this is a $150,000 portfolio. And we stagger them out, because if the market goes up, we will raise our put protection. If the market goes down, we'll try to keep that put protection. And that's why we do some enhanced income strategies during the week to pay for this portfolio protection and to pay your advisor if they are so inclined, because they're sitting at, a lot of them are sitting at their desks all day long, and so they'll hear our calls that when we go out on any short-term trade. And we don't do it too often, but every now and then you got to be sitting there. And sometimes it happens within the last half hour of the market, because you don't know which way stock is going to move or the market is going to move until the end of the day, which is an important part of the day, the last hour in there, because that starts to give away what the market thinks is going to happen overnight and into the next day. So that gives their hand away, because all day long the traders are in there, and we don't know if the market's going to go up sometime, we don't know if it's going to go down until the last hour of the day. Then the traders start giving them their hand away, because they just want to get out or get in depending on how the market's doing or what they think, and then we just might take a position at that particular point. So the professionals that are subscribing to this letter have an advantage because they're at their computers all day. And here's what we did. We sold our position in the QQQs, which we've had for a couple of weeks, for a nice gain. And as I said, we put this in our letter on Thursday, so all of you had access to that are subscribing to the letter. So you had access to the daily letter. We sold that for a nice gain on Thursday, and the rest of you got out on Friday, which was yesterday. And we also saw a big jump in Palantir and sold a 1 week covered call, which we got a few bucks for. And then we sold a covered call on Fortinet, about $2 out of the money heading into earnings, and we received, now folks, this is a $100 stock. Okay, it's a little over $100, but we received $5.66 for that call, which was still a couple of dollars out of the money. And we also got an extra 2 points on the stock because we sold 2 points out of the money, but the stock went up and they took our stock. So between the profit on the stock and the call, we pulled in about 8% on this trade. And usually I don't do anything going into earnings, but that the market expected a big move on Fortinet, and the charts look very, very good on it. The traders were playing that. So we figured that it would level out. In fact, we're going to see that in a second. We thought it would level out, and instead it went up on us, which was just as good. But now, here's what happened. When we get a jump like this, and we went over this last week with another stock, and I can't remember which one it was, but I think, it was Netflix. It had a jump like this, and usually when that happens, we wait a day to see if there's follow-through, and there wasn't. So we sold the 103, and some sold the 105 call, depending when you got the message to sell a call on it. And then the stock went up on us. So they took our stock, but we made about 8% on this move in here. And now we're going to wait. We have to wait to this stock to come down a little bit. Here's a gap here. So we don't know if the stock is going to come down. This is earnings season, and guess what? Everybody goes crazy during earnings, and I really hate earnings season because it just distorts everything. So we'll wait for this stock to come back because we want it in our portfolio. It's doing very nice. Otherwise, it wouldn't have jumped up like this. And this indicator down here, intermediate term indicator that we use, is still buy. But up here, the market went up, made a higher high, but this indicator made a lower high. And it wasn't down very much. It was down not even a half a point on Friday, and Friday was a pretty nasty day toward the end of the market, at least for the Dow, especially down over 440 points, something like that. So we got a little point in here, so we should get a little short-term weakness in here, and we'll pick up the 100 shares of stock that they took from us, so we can get back into this stock. So we'll just wait and see what happens during the week. So, folks, we had a very, very good week this week. The problem is the market started down on Monday, went up during the week, and then went down on Friday. Same pattern as last week and same pattern as the week before. And so over the past 2 months, the market has gone nowhere. And you've got to see our ETF letter to see how those portfolios are doing, which is very, very nice considering what the S&P is doing. So the S&P is up about 2%. A little over 2% for the year. Our best portfolio is up about 6%, 6.5% for the year. So we were fortunate in that our portfolios are doing very good. So we can go out and have a good time on the beach, go for a walk, clear your head, folks. And remember, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So, folks, go out there, have a great weekend, be with your family, be with your loved ones, stay safe, and we'll see you back here in a couple of days.